Hi there, welcome to Kneppy Invest. Time for another September quarter Appendix 4C video, and I thought it's time to give a bit of an update to a company called ORCODA. I did a video on this company about a year ago because they were slightly operating cash flow positive, but I don't really follow this company too closely, and the share price has decreased a significant amount since that last video. However, when I looked at the September quarter results, it absolutely fascinated me because receipts were significantly up from the previous quarter, in fact, previous 3 or 4 quarters. And not only that, this company was operating cash flow positive by about 1.7 million. And that's in 1 quarter. So if the company can continue that momentum going, continue to be operating cash flow positive, continue to increase the cash receipts and revenue, there is potential value right here for this company. So let's get stuck into looking at ORCODA and focus, or first thing I'm going to do is actually look at what they exactly do. ORCODA is a logistics business focusing on 3 areas: healthcare, transport, and resources. I'm only going to focus on resources logistics division right now because the majority of ORCODA's revenue is derived in their resources logistics. So ORCODA's resource logistic contracts manage and digitally connects major projects in oil and gas, mining, and infrastructure. And in fact, their digital platform is called ORCODA Workforce Logistics System, or OWLS for short, that enables control over entire workforces across all phases and respective project life cycles across project personnel, contractors, and suppliers. ORCODA was founded around about 2000. However, there's not a lot of information about exactly when this company was founded, but the company didn't exactly list on the 22nd of August 2018 because ORCODA's story began back in 1998 via a company called Coolgardie Gold. Now, of course, Coolgardie Gold probably was a gold exploring company and they weren't very successful in what they were trying to do. And then Coolgardie Gold became Smart Trans with the ticker code SMA. I was following Smart Trans for a while back in about 2014 or 15, so about 8 years ago, and there was a little bit of hype in that company. However, whatever they were trying to do was not successful, just like Coolgardie Gold. And then back in 2018, Smart Trans went through a significant change in their business model and then became ORCODA, went through a name change on the 22nd of August 2018. The current managing director of ORCODA is Jeff Jameson. He owns 6.7% stake in the company. And two of the largest shareholders are Jeff Williams, who owns 9.8%, just shy of 10%. Now, Jeff Williams is the operations manager of the Beta Group of companies. Now, ORCODA bought the Beta Group of companies back in 2020. And the other major shareholder is S. Pronk, who is the non-executive director, Stephen Pronk. So he's on the board and he owns 9.5% stake in the company. Current markup of ORCODA at 9 cents is only $14 million, which might seem a little bit low when we look at the financial state of the company. And the share price has been as low as about 5 cents. So that means the markup of this company at one point in time, a few months ago, was under $10 million, which might seem a little bit absurd for a company that is profitable and for a company that did provide about $1.7 million of operating cash flow in 1 quarter. And the ticker for this company is ODA. Now let's have a look at the breakdown of their revenue by service lines. They call it service lines, not segments, verticals, or divisions. And by far their biggest service line is their resources logistics. And we have seen, or the company has seen, pretty good growth in that logistics area. In fact, the revenue has increased from $5.3 million in financial year 21 to $13.4 million in financial year 22. And for the healthcare and transport logistics divisions or service lines, they're just lumped them together. And not much growth there, but a little bit of growth. In fact, revenue has grown from $2.1 million to 2.6. So by far, the biggest service line is resources logistics. And that's why I did focus on what they are doing in that resource logistics at the start of this video. So revenue has increased a fair bit from financial year 21, 7.6 million, to financial year 22, 16.1 million. Some of that increase might be because of some acquisitions. The company has done some acquisitions in the past. And when you break down their revenue by geographic region, all their revenue is derived in Australia. So this is an Australian-based company, not a global company. Now let's have a look at the cash flow statement for their financial year 22. That should be financial year 22, not financial year 23. I'm getting a little bit ahead of myself. There's nothing too absurd when you look at any of their financial statements for this company. So receipts of customers more than doubled from 8.5 million to 17.2 million. And the company was operating cash flow positive for the financial year, $1.1 million. They spent $1 million on the acquisition of Beta Group, spent $591,000 on property, plant, equipment or capital expenditure. They received $1.2 million through a capital raising and actually repaid $600,000 back. So the cash on hand actually didn't increase at all. In fact, it remained almost static from the start of the financial year to the end of the financial year. So when I do have a look at their financial statements, there's nothing too bad there. This company is operating cash flow positive. They're also free cash flow positive. They're also slightly profitable. So when you do look at the financial statements of this company, I don't quite understand what the market is completely missing here. Maybe it's just the sector. Maybe it's their business model. But because the market is completely missing the story on ORCODA, and if this company can continue the growth they are seeing into financial year 23, into financial year 24, a markup cap of $14 million might seem really, really cheap. And based off the first quarter of financial year 23, things are moving in the right direction for ORCODA. Receipts of customers, 6.8 million, which was a record quarter for this company, and it absolutely smashed the previous record quarter. In fact, we'll look at the receipts history in the next slide. And not only was this a record quarter in terms of receipts for ORCODA, they were operating cash flow positive by $1.666 million. However, in saying that, they did benefit from income tax refunds of $498,000 and government R&D grants and tax incentives of $410,000. If we take away those two things, this company was still operating cash flow positive by about $700,000, $800,000. Now, the cash on hand for this company did increase by about $1 million, from 2.5 million to 3.5 million. And the reason why cash on hand only increased by $1 million, even though this company was operating cash flow positive by $1.66 million, was because they spent $500,000 on an acquisition. So things are moving in the right direction for ORCODA. And the market did slightly take notice to these results. We did see the share price, increase a little bit on these results. And I think maybe some participants in the market are just waiting patiently just to see if this momentum can continue into the December quarter. And if this company has another really good December quarter with increasing receipts and another operating cash flow positive quarter, I think we might see another rise in the share price. Now let's have a look at the cash receipts history for ORCODA, going back to when this company became or transitioned from SmartTrans to ORCODA. So from the September quarter of 2018 to around the start of 2021, not much signs of any increase in cash receipts for this company. However, during 2021, we saw cash receipts increase from about $1 million to $4.6 million. Now, in saying that, last 4 quarters before the most recent quarter, receipts went sideways. So one of the reasons why the share price might have taken a bit of a hit during 2022 was because the market was concerned about cash receipts just leveling off. And then we saw this increase in cash receipts from $4.3 million to $6.8 million. Now, some of this increase in receipts would have been because of some acquisitions this company have made. But the company is moving in the right direction. They are profitable, operating cash flow positive, and I think large portions of the market are just wanting to see this momentum continue into the December quarter. Now let's have a look at the long-term chart for ORCODA, going back to when they listed, well, not listed, but they changed the name from SmartTrans to ORCODA. Not the best looking chart, not the sort of chart you want to see as a shareholder. And in fact, the share price has just recently bounced off the all-time low for this company, which was just above 5 cents. Now, in saying that, since about June of this year, we have seen a bit of an increase in volume. Now, one of the reasons why there might be an increase in volume is because the share price has dropped to about or less than 10 cents. But the increase in volume wasn't really matched when we saw dips in the share price back in 2019 and 2020. We saw very low volume, but this increase in volume is heartening, or should be heartening, to shareholders, because it is telling us that there is portions of the market getting a little bit excited about a quota. And another sign that the market is getting a little bit excited is a run in the share price over the past few weeks. We'll say the past 8 weeks, when the share price has increased from about 5.5 cents to a current share price of 9 cents. And on the back of the increase, we have also seen the company release a really good September quarter result. So maybe the momentum will continue. Now, in saying all that, you can see the share price has been significantly higher during the past 4 years, which means there's a lot of resistance, a lot of shareholders who bought into this company at higher share prices in the past, who now consider this company to be a dog stock and will want to sell out of this company or sell their shares in this company. So that is resistance. The best way the company can overcome that resistance is to continue releasing really good financial reports. And the September quarter is the first step in doing that. That's all I have looking at ORCODA September quarter Appendix 4C. This was a pretty good quarter from the company. Operating cash flow positive by about 1.7 million. Cash on hand increased $1 million. This company also saw a significant increase in the cash receipts. So the main thing I want to see from this company is continual momentum into the December quarter and then even into the March quarter. And I think if this company can continue being an operating cash flow and free cash flow positive company, I think the market will eventually take notice to the company. If you have any questions about ORCODA, if you are a shareholder of this company, you'd love to share your opinion on what you think about the management, what you think about the quota, what you think about their business model. I'd love to hear your opinion. So leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.